The market chops and then drops into the close. Is it time for a bear run? This is Invest with Jacob. Okay, guys, so the market tried to move higher yesterday and failed and then sold off into the close, looking like it wants to backtest Friday's low. Now, one thing I try to do with the subscribers to my channel, as well as the viewers of this channel, is I like to be upfront and honest when I'm convicted in a path and when I'm not. In this case, I am not. And that's not to say that paths aren't playing out. It's to say that we're in the middle of a few different paths, and because of the complexity off of the top and where we're at in the market, any one of them can still play out. I'll get into all that in just one second. But first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, if you've been following this channel for any amount of time, you know that Elliott Wave's biggest weakness is in the micro count, and that's where we're at right now. There are several paths that can play out, so let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And so off of the top, I've talked about this, there's so much overlap here. There's no impulsive move to the downside. So unless it's going to trace out as a diagonal. So if you look at this and you count this as wave 1 down, which I have on the chart, and wave 2 up, okay, then you have to count this as 1 of 3 and 2 of 3, which would mean this would be 3 of 3, where we hit the 1, 2, 3, 6 extension of 1 and 2. Perfect. Except that 4 of 3 collapses back up and invalidates the count. If you count it any differently, it all invalidates unless we're tracing out a diagonal, which I have on the screen. So the reason we are in between counts and we don't have much conviction on any count is because of the complexity and overlap of the move down off of the high. It got too deep to consider the 1, 2, 3, 4, 5 standard count higher. It's complex and overlapping to the downside, so we're kind of in the middle of a few different counts. So let's talk about the counts that we're looking at. Okay, the first potential count, because it's the easiest to eliminate here and might be eliminated soon, we'll have to see how it goes. The first potential count would be that we did bottom in wave 4 here at 39.47, and we're trying to complete this A wave up. Okay, and then we would look for a B wave pullback, and then finally C of A up toward that 41.50 to 80 area to complete this A wave, which would be our path back to 42.50 to 4,300. All right, this invalidates and is no longer an option as soon as we take out this wave 4 low. All right, so if we come back down here and take out this wave 4 low, then this is no longer going to be a path we are tracking. Our second option is that we are trying to bottom in wave 3 in red, and it's potentially, we've already done that here where the wave 4 is. Potentially we have an A, B, C higher toward the 40.80 to 4100 area. We'd prefer to see 4100 so it gets into wave 1 territory since we are tracking this as a diagonal. And then we see wave 5 down. Now, if you've been here for a long time, you know I hate diagonals, and both of those paths are diagonals. So in both directions, we're tracking a diagonal, which gives me low confidence in those counts. Now, the third count would be, okay, if we come down and we break this low, we could see some accelerated selling down toward the 3,800 area. And that would be a bigger wave B off of a bigger ABC. So in that case, off of the low back at 3,500, which is just off the screen, this whole move up would be wave A instead of A, B, and C. This would be wave B down to the 3,800 area, and then we'd look for C back up towards the 4,400 area after that. So there is a potential for a bigger A, B, C playing out. Now, all of these counts are less than ideal, and the reason they are is because the micro count is so overlapping off of the top. There's no clear structure that we're working with, so we have a low confidence in any of the counts. But as we talk about in Elliott Wave all the time, when you are confused or there's no clear count, give the market some time and a clear count will present itself, and that's what we're waiting for now. So again, those are the 3 counts that we're tracking. We'll need more information to figure out which one we're in and what's playing out exactly. Until we get that, we're kind of in this waiting game where we're looking for a better setup to invest our money. When we have an unsure count and we have no conviction, we sit on our hands and save our money. Yes, we may miss a move down like this one, but this move down would require a lot of diamond hands holding in all of this chop at the top until you got to finally the waterfall C wave at the end. So when things are unclear, the best thing to do is to preserve your capital for very clear setups and very clear opportunities. And that's what we're doing. Over on the NASDAQ, okay, as you can imagine, very similar counts off of the top. We're looking for that potential for the A, B, C move higher up in this bigger wave A, okay? and then the B and C that would take us back toward that 13,300 area in the bigger diagonal. But again, that invalidates as soon as they break this low right here, this wave 4 low, and is no longer a possibility after that. Okay, if we are looking at the bigger ABC, then we'd be looking at a sell-off down into the 11,200 area. So this move up would be A. We'd look at a bigger sell-off down to 11,200, and then a bigger C wave up toward the 14,000 area. And then the diagonal count to the downside, okay, which would be, you have the 1, 2, 3, and then we're looking for that bounce up to get into wave 1 territory around the 12.6 area, and then 5 down from there to give us a diagonal, leading diagonal down off the top as our initial move down from there. Again, none of these counts are ideal, so we're waiting for more information for the market to play out. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link and it'll take you right over to our website. Once you're there, check out our membership plans area where we have 2 incredible plans, and they both come with a 7-day free trial because I want you to get in there, make sure you love it, and become part of our trading team before you ever spend a penny. You can cancel at any time. Okay, we just started our Elliott Wave for Beginners course and all of our training curriculum, which we'll keep adding to over time, and this comes with both memberships. In the first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, as well as a midday video where I go over exactly where we're at in the counts and the training that you just saw. We trade the SPY and the QQQ, and we swing trade, which means our trades can last anywhere from a few days to a few months, so we don't trade quite as often as a day trading room does. However, if you are interested in day trading as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures the trade that's so unique. It's something you kind of have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. Key takeaways for today: we're practicing patience here. A break of this wave 4 low could lead to selling down toward the 3,800 area in this B wave. However, if they can hold the wave 4 low, we would look for a bounce in either the red wave 4 towards 4,100 overall, or the A wave up towards 4,150 to 4,180. Over on the NASDAQ, same types of situation. If they break down below this wave 4 low, we would look for them to continue selling down toward the 11,200 area. However, if they can hold the low, we would look for a bounce to either 12,600 in wave 4 or up to the 12,800 plus area in the A wave of the bigger move up. Guys, that is the market update for today. I will talk to you tomorrow.